What up, everyone? So I've been trading for over 6 years now. I talk with a lot of different traders on a daily basis. I have very close family and friends who work on Wall Street, and there are some really solid traders in the InvestiTrade community, link below. But what stands out from the best traders who are consistently profitable are what we're going to go over in this video to try to replicate and implement in our own trading to get better and to open up new doors. We're also going to examine what these best traders do routinely, not just the things they have and not just the things they know. So this is going to be inspired by Steenbarger. And before we get into it, if you haven't already, I'm going to link my Instagram in the description below. I recommend following it at InvestiTrade. I post daily trading recaps on here, along with very good trading tips and tricks that you're really not going to find anywhere else. Link is in the description below. It's a good resource and you're missing out if you're not following it. But now let's get right into the lesson. The number one attribute that I can't stress enough is adaptability. I say this all of the time. The market is a storyteller, and our job as traders is to comprehend the story the market's telling us with context clues and being able to adapt to new things, read new chapters, open up new pages, and comprehend the story that it's telling us. Adaptability is key because market conditions change just like seasons throughout the year. Market condition that we're looking at right now might be different from one that we saw, let's just say 2 months ago. So as traders, we constantly have to adapt to current market conditions, which is why sometimes if we learn something last year or we learned something that was applied 20 years ago, it might not still apply exactly how it is in the current market. The core might be the same, but we have to branch out and adapt to fit the current conditions. Each environment is going to be different. There are different market environments, and they change their trading to fit the current market story. There's different environments where volatility might be higher and volatility might be lower. There's also balanced versus imbalanced markets, which is extremely key because you have to trade very different in a balanced market where you would on an imbalanced market. They're two completely different things. And if you trade on a balanced market, how you would trade on an imbalanced market, you are going to get destroyed. Different markets and different conditions, you also have to change your confirmation signals, your stop losses, and emotions fluctuate just like seasons. You know, in the winter, you might be not as happy as you are in the summer because the sun's out all day long. So emotions play a big part in the different conditions, and you have to be aware of it and adapt to fit the current theme. Now, you have to find ways to add pieces of the puzzle to fit the edge and remove unnecessary ones. It's like reworking the system. Now, I posted a video September 22nd about the day trading secret you must know, and I basically went over putting the pieces together to fit your edge. I'll link this below as well if you want to watch it, if you haven't seen it, but this is a great video. But the point I'm trying to make here is no market's the same. There's not a one size fits all, meaning, the market this week was different from what we saw 2 weeks ago or 3 weeks ago. So there's no definitive answer in the market. There's no right, there's no wrong, and there's no the market is very unstructured. It's not a one size fit all, and you have to be able to fit yourself as a trader to the current theme and the current conditions. So that's what I've seen the best traders do. They're very flexible to adapt. Now, the best traders are also very, very creative. The market, like I just mentioned, is a storyteller. So you have to be creative to how you comprehend the market, and they view the market very differently than the rest. People don't view the market as a job. They view the market as a hobby where they're going to open up their screens, they're going to click the buy button, and they're going to make tens and thousands of dollars. The best traders are creative with how they trade and how they view the market. If 90% of day traders fail, a serious edge in itself is just doing what they don't do or doing the opposite of what they do. So figure out what a lot of traders struggle with doing, why they take large losses, and do some reverse engineering to figure out how you can compensate and how you can earn from their pain. When there's other people's pain in the market, that's when you gain the most. So these traders are very, very creative. They're always looking at new ways and doing different things outside of the box, and they have an open mind. You got to think outside the box. You can't have such a fixated mindset that I'm going to do this and this is going to be the outcome. Or when I see this in the market, this is going to happen. Think outside the box, have an open mind, and creatively develop context. I cannot stress how important contextual analysis is. A strong contextual trader can survive in any single market condition, any single market environment. This also is an edge in itself. What I mean by context is understanding volatility, understanding the auction process, where are buyers, where are sellers, where are people's stop losses, how are conditions, who's eager, who's showing effort, who's showing reward. Different things give us context from the story that the market's portraying. And if we could creatively develop this context and come up with our own story and own plan, it is a serious, serious edge. To get an example of this, let's go over a pre-market plan. I post these every single day in the Discord of the levels I'm watching, the setups I'm looking out to develop, and some overall market context. So this one was on NQ. You all know I trade QQQ options off of this. We were in a very tight balancing range. We had demand lower at these green boxes here at 14769, 14728. And the real test for me, I said, was at the 14846, 14905 supply zone. If we slice through it, I'm going to be more convinced to the upside, targeting supply. But if we reject this supply zone, we have a fail attempt out of balance. We can move back into the range or sell off into the demand mentioned above. So this supply at 14846 was key. This is what I mean about context. We could only plan so much, but we have to interpret the story that the market's giving us and be able to adapt and react to what it actually throws out at us, especially intraday. So NQ opened up. We rallied inside of the supply zone. We did a head and shoulders pattern. We sold off, making lower lows, making lower highs. This was an acceptable short entry where if you played QQQ puts at the supply zone, and let's just say you took profits at demand, these went up over 150, 200% in a matter of an hour and a half. And also, with the current theme of the market, as I'm recording this video, this week, demand zones have been acceptable to take profits from a short position versus getting long at and being a first buyer. If you play counter trend, it's acceptable to go smaller size or just accept it's a lower probability of a trade. But in this market, I've been using demand to gauge the auction and give me more context for an aggressive sell position versus a new long position, as long as buyers aren't factored into the market. Eventually, we sliced through this demand like it wasn't there, and you could have squeezed, a couple points more to the downside off your puts. And then eventually we chopped around and balanced back into the range after we broke below demand. We have to plan all of our trades. The traders that I see fail versus the traders that I see making millions of dollars have a fully structured plan and have a fully structured edge before any single trade gets put on. They accept that there's no right or wrong answer in the market. If you're looking for something that works 100% of the time, it's not out there. Instead, they have an open mind, and they accept if they take a loss. It wasn't because they were right or wrong. It just the market wasn't agreeing with their analysis, and the market wasn't agreeing with their time of entry. Now, these creative traders also generate new ideas, and they look for the best ways to maximize risk to reward. These traders are risking little compared to what they're getting rewarded. They're getting rewarded 100,000, 200,000, and maybe they're only risking 20,000 or 30,000. They have a very high risk to reward because they generate new ideas that fit the current conditions, and they detect opportunities where others see none. And they're very unique and very special. That's what makes them creative, and that's what makes them the best traders. You're not going to find a very generic trader. They're just not out there. If you're generic in this market, you're going to struggle. Instead, you have to be unique, and you have to be very special because that gives you an edge. And here's another setup of a trade that I took. This is on the S&P 500. You all know I trade SPY options off of this chart. So the market opened up, we sold off, and yes, I said that demand is a lower quality of a trade, and in this market, you should use it to take profits from a short position. However, if you are watching the market develop, and this is what I mean about being creative and understanding there's no right or wrong answer in the market, as soon as you get your bias or your ego involved, that's when you're going to make trades and probably take losses off your emotions versus facts of what the market's giving you. You also detect opportunities where others see none, and you get creative with it. So at this trade, I honestly did not plan to get long at demand. I was using this zone to gauge if we were going to sell off into lower demand zones. But in the first 20, 25 minutes of the market open, the market came down to this demand. And if you were watching the tape, you would have seen very, very aggressive and heavy buy orders come through at like 4354 and 4350. And that was a convincing sign where I detected opportunity where I really didn't see any. And I put a trade on targeting the supply zone, and we hit it perfectly, rejected back into this demand zone, and then bounced back up into supply where we balanced for the rest of the day. So you always got to be on the lookout and detect new opportunities, detect new context, and think of where you could get a good entry, or think where you could find an opportunity where really the risk is in your favor and the reward is in your favor, because that's when you get the best trades. Productivity is extremely important. A lot of traders think that they could sit in front of the screens all day long, study for 10, 20 hours, and tomorrow or next week they're going to be the best trader and make $1 million. It's possible, but in trading and pretty much everything else in life, working smarter is so much better than working harder. The harder you work in this, sometimes it's actually not beneficial to your trading. Instead, work smarter, do the proper education, journal your trades, watch the market develop, review, journal, and definitely remove old habits, that's working smarter, and learn new things. You also need to preserve mental capital. In my opinion, mental capital might be up there with your actual trading capital monetary wise. Mental capital and what goes on in your head is very, very important, because sometimes, or what I've seen the best traders do, is they organize their time, they prioritize their work for improvement because it's both efficient and effective. So there's a video in the course about this, cognitive overload. Pull this up over here. Where I talk about, the more time spent, your efficiency will go up. But there's a threshold where you spend more time and your efficiency actually goes down and your work is less effective. That's the point I'm trying to make with mental capital. The best traders that I see, I know guys that make over 10 million bucks and traded less than 15 times last year. They still work and improve daily. They're still journaling their trades. They're still reviewing what they could do better, what they should remove. And they're working like they haven't made it yet because they always see room for improvement. Being productive, they add screen time, they strengthen the process, and they always do that to generate new ideas and new context. Like I said, if you're a statue from the 1980s, you're not going to survive in this market in 2020 when, things are different. They learn what not to do, and they learn what to do the most. They're always strengthening their process, trying to get better. Now, another thing is they know when to walk away. I've seen guys walk away in the first 10 minutes and say this is not even worth it. They know when to walk away, they know when to shut down, and they know when it's the right time to strike, to get up to home plate and swing for a home run to being an active participant and making a lot of money. A lot of traders, especially retail traders, can't accept that. They think they got to trade every single day. There's times when you have to be there and be active, and there's times where you really have to sit on your hands. The best traders also take quality setups. This is so important. And they avoid low quality setups. You got to know what makes you the money what makes you the most money. That's a quality setup. And you have to avoid setups that don't work out in your favor, trade off for emotions, or lose you the most amount of money. Avoid all the noise and make use of the time, or else the market will make use of you. Use your time wisely. And the successful traders also manage themselves very well. Their performance is so much more about themselves versus the market. The best traders never stop improving, like I just mentioned. It makes them great because of that. The best athletes also never stop improving, which makes them great. You always see LeBron back in the gym. You always used to see Kobe in the gym working 2-3 hours at a pop, 5-6 times a day. The best traders do the same thing. Myself, I'm always looking ways to scale up, increase my size, let go of some of my emotions, journal my trades better, look for different setups that I know are really going to be good ones. We're always looking to improve. There's never any complacency, because with complacency comes zero growth. And I can speak for myself on this. The best traders work on themselves mentally and physically as much as they work on improving the market. With trading, it's a lot about your emotions. So you have to maintain focus. You have to have energy. You have to be patient. You have to be disciplined. And a lot of this has to do with your mentality and even your body physically. You have to accept risk, accept the unknown, and be cool with uncertainty. If you're not cool with risk, can't accept it, you're not cool of not knowing the outcome, then I'll say it right here, trading's not going to be for you. Also got to improve your mental health, your EQ. For me, I like working out, running before the market opens, working out when it gets quiet. It helps me stay focused, it builds discipline, and it helps me not deplete all my mental capital by staring in front of the screens. It removes brain fog, and it really puts me to work at such a high and efficient level by doing things that I don't want to do. It helps me build my discipline. You develop a solid routine. Do you not want to read a book? If you don't want to do it, then go do it, because that subconsciously is going to build discipline, and that discipline is going to be shown in the market. Stick to it. Don't just do something to do it. Do it because you actually want to improve, whether it be reading an extra couple pages in a book, running the extra mile, journaling for 20 more minutes a night, reviewing another couple charts, working out, sleeping well, eating well. Those are extremely key. I really, you guys might find this to be funny or might find this to be crazy for me saying this, but the things you do in your daily life subconsciously bleed into your trading. If you're not eating well, how do you perform your brain to, or how do you expect your brain to be at peak performance? If you're not sleeping well, you're sleep deprived, you're not getting enough rest, how do you expect your brain to be at peak performance? Also, working out, like I just mentioned, it builds that discipline. But these things, self-management wise, seriously, subconsciously go a long way. If you can't accept it, you're waking up 5 minutes before the market opens, you're rolling out of bed with, McDonald's in your stomach from last night. How do you expect to perform well today? It's possible, but it's very unlikely, and your performance is not going to be at peak. You always have to be trading at peak. If you're not at peak, your performance is not going to be at peak. And anytime your trading performance is not at peak, you are going to take very avoidable losses. So I'm going to leave you all off on that note. I could have, ranted for another 20 minutes about this, but I'm going to end it. If you enjoyed this video, smash the thumbs up button. If you stuck to the end, let's try to get this to 500 likes, 600 likes. I'd appreciate that. And if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. But besides that, I'm ending it. Peace out.